Axon reported earnings after the market closed on Tuesday, and once again, this is just one of the best performing companies I have ever seen. Stock I've owned for probably almost a decade now, and they just continue to knock it out of the park year after year. Q4 2023 was another example of that. Continued growth, even faster than management expected, and I don't see anything stopping this company long term. They have become the go-to name in body cameras and tasers for the law enforcement market, and now we're seeing them start to move into more consumer products, enterprise cameras, which is an area where I think it makes a lot of sense for them to be, and also consumer protection products. So taking a lot of the technologies that they built for law enforcement and just repackaging it for consumers. So I think a lot of growth potential ahead, and they gave really strong guidance for the next year. It's still a very expensive stock, and that's been the case with Axon for quite a while, but they just continue to perform year after year. And if a company can compound growth at 20% a year plus, which Axon has been doing, that's how you get these phenomenal returns that they've had. So I'm going to dig into the report today. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. So let's get right to the numbers. This is a look at part of the shareholder letter. You can see that revenue for the quarter was $423 million, up 28.6% from a year ago. So this is a pretty big company, still growing at nearly 30% per year. Just phenomenal results. Gross margin still really strong. One of the things that I think often gets overlooked with Axon is that their taser business is actually almost as high margin as a typical SaaS business. So this has been a very high margin business for a long time. One of the things, though, they have not necessarily been focused on in the past is their operating or net profit, because they've been pouring most of their margin into growing, particularly their sales force. But now as they've reached a level of scale, they're able to pull back on that a little bit, at least from a percentage of revenue perspective. And you're starting to see improvement on the bottom line, a 90% increase in operating profit to $43 million in the quarter. Net income was $57 million, or 13.3% net income margin. So pretty good net income margin. I think there's room to grow that in the future, but just solid results across the board. Operating cash flow, $140 million, and free cash flow of $116 million. And they've got a cool $1.2 billion of cash on the balance sheet. When you start to look at their segments, this is the way that they break things down, and it's the right way to look at Axon. Their cloud services is going to be their SaaS products. So that's typically going to be very high margin. Gross margin, 74.6% in the most recent quarter, $163.6 million in revenue. Year over year, 44% growth. Sensors is the hardware that goes along with those that goes along with that software. So the body camera is what they call a sensor in this case. 24.8% growth and a 46% gross margin. So not quite the same margins that you get out of the SaaS side of the business, but definitely not razor blade where you're trying to just break even on selling hardware. They're still very profitable on the hardware side. The taser business, look at these numbers. I think this is always really impressive to me that the taser business is still almost their biggest business. The Axon Cloud, this may be the first quarter that the Axon Cloud and services has actually passed tasers in revenue. You can see $161 million in revenue, up 18% year over year, and a 57% gross margin. That alone would be a phenomenal business for a lot of companies, but that's now become kind of an afterthought for Axon. The other thing to look at, and this is more SaaS metrics, is annual recurring revenue, $697 million. Total contracted revenue is $7.1 billion. This is one of the major changes over the last few years is Axon has moved to these very, very long-term contracts. A lot of these contracts are 10 years in length, and law enforcement agencies are signing up to pay a monthly fee and then get hardware, body cameras, and tasers refreshed every couple of years. So there's a schedule that comes along with the contract, and they get updated equipment. So great way to keep your customers both happy and with the best equipment and keep this recurring revenue coming. Net retention rate, this is going to be the basically revenue growth from your existing customers, and that's 122%. Any SaaS company that can be in excess of 120% is doing a really great job. Axon is in excess of 120% right now. So just great results. Here is some of these numbers visualized, and this is on the left is the SaaS recurring annual revenue. You can see that that was $161 million at the end of 2019. Now is almost $700 million. So just incredible growth there. And recurring revenue from subscriptions, that's that structure that I talked about earlier, where customers aren't just simply buying a taser, buying a body camera, they're signing up for a subscription for a hardware and software product. That's now 95% of revenue. So this is exactly what you want to see, is a shift in the business model to have this be much more durable business long term. That's why they've got such a big backlog. And then this is just a look at their revenue growth. Cloud and sensors is in the dark yellow, 177 million. A couple of years ago in 2020, that has grown significantly. Sensors has grown. Tasers have grown. Everything is doing extremely well. Obviously, the cloud and services business has outshined the others, but hard to argue with the growth with any of these segments. And then margins and free cash flow, like I talked about, they made a lot of investments in the business a number of years ago, and those investments are starting to pare back as revenue growth starts to stack on itself, starts to compound. So free cash flow, you go from $52 million in 2018 to $148 million in 2023, tripling over the course of about 5 years. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Now, the other thing that management always talks about is what their total addressable market is and how big they think these businesses can be. They talk about a $63 billion total addressable market, and that's broken down in a couple of different ways. So I wanted to just highlight those and talk about where the company might be growing more in the future, because they're obviously become the go-to name in law enforcement. They can continue to grow that business, particularly internationally. But you got to start thinking about what's next for Axon. And what they're talking about is their current business, digital evidence management, productivity, and added software is about $18 billion in total addressable market. Real-time operations, another $16 billion. So $35 billion for the core products for Axon. Where they could move into other products or products that exist but maybe don't have a lot of market share is camera hardware, $10 billion. Axon Air, AR, and VR training, $8 billion. Those are interesting growth avenues. I think virtual reality is something that Axon has been pretty early in moving into, but don't really know exactly what that's going to look like. Is there some sort of training that you can have for police officers, for consumers? A big potential market, and maybe this is the right company to build that out, but a long ways to go. That's maybe a growth product that would be 5 to 10 years away. And personal protection, they've talked about this being a $5 billion market as well. That's another one of those products where if the average person just had a taser on them instead of a handgun, that could make the world a safer place, aligns with the company's mission long term, but that's also kind of a large lift to get that to be sort of the norm. So expect more from that in the future. The other thing they highlighted in their shareholder letter is basically just a wearable device that you wear around your neck that includes a camera for enterprises. So for customer service people who are interacting with people in stores and things like that, could potentially be a nice device for them, and then add in some of those cloud features that are included for law enforcement. So those are potential growth markets in the future. But right now, the core business, just the law enforcement products, growing at a phenomenal rate. Axon said their guidance for 2024 is $1.88 to $1.94 billion in revenue. That's implying 20 to 24% growth rate. Now, if history is any indication, they're probably going to beat that. So continuing down the path of 20+% growth rate, just compounding year after year. It's hard not to love this company. It's a very expensive stock. I think that's worth keeping in mind. As I'm recording, shares are trading for about $20.4 billion market cap. It looks like shares are going to be up a little bit in pre-market tomorrow. So that's in excess of 10 times sales. It's a very expensive stock, but a very, very high quality company as well. So a lot to like about Axon's operations. If I was a buyer of the stock, I would love to see the valuation come down a little bit. But as somebody who just holds shares, I'm definitely not selling right now. But what do you think about Axon and their quarterly report? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.